What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically with income ETFs. Today, we are talking about my favorite income ETF from NEOS, BTCI. This is a Bitcoin income ETF. I personally think it is an incredibly powerful asset, an incredibly powerful way to diversify our Bitcoin exposure a little bit. It's by no means a substitute or alternative to owning actual Bitcoin. In my opinion, I think we should all have at least a little bit of Bitcoin in cold storage, which I do have. But this is another great way to get exposure to Bitcoin, but at the same time, generate lots of cash flow. The yield on this is pretty high. And once you understand how the income ETF works, you'll quickly realize that there's a reason for the yield to be as high as it is. And I just think it's a really powerful way for us to create cash flow in our lives and get really good potential returns. Also, use the cash flow that this asset generates to acquire more of the asset, which therefore then increases our cash flow even more. So I love these income ETFs. I think NEOS is freaking awesome. So let's go ahead and get into it. What is BTCI? Like I said, it's a Bitcoin income ETF designed to turn Bitcoin's volatility into income and cash flow. That's specifically what we're trying to do here. And the nice thing, the nice thing is we still have exposure to Bitcoin. So meaning like as Bitcoin's price continues to rise, we will still benefit from that. We are giving up some of the upside exposure to Bitcoin. So if Bitcoin is up 100%, for example, in the next 12 months, BTCI will probably not be up as much as Bitcoin, but it should be pretty close. All right. So the point is we're giving up a little bit of upside in exchange for this consistent cash flow coming in. All right. And the way that they create that cash flow is they use an options strategy, specifically selling covered calls. And we'll get into a little bit more detail on how that works in a little bit here. All right. The inception dates, it started October 17th, 2024. So it's relatively new, not even a year and a half old at the time of this recording, but it's been pretty consistent thus far. Now, it is very important to note that this is not a Bitcoin spot ETF like IBIT or HODL, right? Where they are just buying Bitcoin and getting exposure to Bitcoin, and they're not producing cash flow from it. That's not what this is. BTCI does have actual Bitcoin exposure from the assets that they purchase, but then they sell covered calls on those assets, right? So just want to be clear on that. All right, who runs BTCI? It is managed by NEOS Investments. Really awesome company. They have tons of different income ETFs. I actually got my start in income ETFs with NEOS. Their SPYI fund is the first ETF that I purchased, and then I eventually sold all of that and moved it into BTCI. It just made more sense to me because I am a very big fan of Bitcoin. I believe in it long term. So as long as the asset is not going anywhere, then it just made more sense to me, which I don't think Bitcoin is. It just made more sense to me to move my funds to BTCI, get a much higher yield on an asset that I believe is going to perform very well over the long run. All right, but NEOS is just absolutely fantastic. You can go to their website. I think it's neosfunds.com. I'll link it down below in the description or show notes for easy access for you guys. But you can see all of their different income ETFs. They're really powerful. They're all options based. So basically they purchase the underlying assets and then sell covered calls on them. They are extremely tax efficient, guys. This is a major benefit over many of the other different types of income ETFs, which is why I only buy income ETFs from NEOS. I don't own any income ETFs from anyone else right now. It's just NEOS. One, because I really like their covered call strategy and how it protects from NAV erosion. The yield is really good. We still get upside exposure to the asset, but they're also extremely tax efficient. Much of it is return of capital, which is kind of a taboo word in the investing world, I guess, in the financial industry. But it doesn't mean they're giving us our money back. It's just a tax classification. I will link down below to their NEOS's explanation of how return of capital works and how it creates that tax efficiency down below for you guys to learn more about it. But the tax efficiency, really, really awesome benefit. And volatility, volatility driven income products, basically. Like I said earlier, they're basically taking the volatility of these asset classes and turning them into cash flow while still maintaining some of the upside exposure. Okay. And yeah, BTCI follows pretty much the same framework as all of their other income ETFs. All right. So what does BTCI actually own? Because it doesn't own actual Bitcoin itself due to regulations, at least at the time of this recording. I believe that's the case. So they don't actually hold spot Bitcoin like in cold storage or anything like that. Instead, they hold assets that provide Bitcoin-linked exposure. So IBIT and HODL. If you actually go to the NEOS website and go to their BTCI ETF, and if you scroll down a little bit, you can see a tab where it says holdings, and you can see all of the assets that they hold in the fund that they write options against. Right. So they do have cash and collateral assets as well, like treasury bills, because they're only allowed by regulation to own or have a certain amount of Bitcoin exposure. I believe it's up to 25% at the time of this recording anyways. So you'll see that they have a lot of treasury bills as well. And I think they only write covered calls against like 30 to, I think it's upwards between 30 to 60% of the underlying assets. So they never sell covered calls against the entire portfolio that they have. And that's what actually helps us, allows us to maintain some of the upside or get some of the upside exposure to the assets, and it protects from NAV erosion. Right. It's really powerful. All right. They do have synthetic options contracts that mimics Bitcoin price action. Not going to get into all the details on that. It's a little more complicated, but they have basically the point is they have various different ways where they get Bitcoin exposure. But it's not from holding actual Bitcoin. Okay. So the structure allows it to generate that income. It manages risk really well, and it stays compliant with ETF regulations. All right. BTCI's core strategy. It's that covered call option strategy. All right. So they gain their exposure to Bitcoin by having these purchasing these underlying assets, IBIT, HODL, synthetic options contracts, right? And then they sell covered calls. They sell call options on that exposure to generate the income. And we're going to get into a minute why the yield is so high. And it's because of this option it's a combination of the option strategy and the volatility of the underlying assets. But this is essentially what they're doing. They buy the assets, they sell the covered calls, that creates the distribution. Okay. Why Bitcoin volatility really matters here, and why this to me is one of the reasons why this is such a powerful opportunity. So you hear a lot of times people complaining, mainstream media and lots of influencers out there that don't like Bitcoin or whatnot. One of their arguments against it is that it's so volatile, and they're right. Bitcoin is a pretty volatile asset, although that volatility has come down quite a bit over the years. It is still pretty volatile compared to other assets. However, that can be a really, really good thing for us. In fact, it is a very good thing for us when you own something like BTCI, because that's what results in the extremely high yield on a consistent basis as well. So what it means is, like, basically when you hear high volatility, think when we're talking about income ETFs here, think or know that the options are going to be much more expensive, which is beneficial for us because we're selling. Well, not we, but NEOS is selling options, call options, right? So if the options are much more expensive, well, that's really good for the fund because that's going to generate a much higher yield since the options are so much more expensive because of that volatility. See, so we're starting to harness that volatility, and instead of owning just owning the asset outright where, it's fluctuating in price all the time, now we could turn that into actual cash flow. All right. So when they sell the call options, the option buyer pays higher premiums. The seller collects more income. All right. BTCI benefits directly from this volatility. So in essence, we want the volatility of Bitcoin to stay relatively high for really two reasons. That volatility is what allows the price to skyrocket. Of course, there are corrections, but over the long run, like when you look at Bitcoin from its inception, it's the greatest performing asset of all time, without question, even with all of the major corrections. So it's volatile in the right direction. So that volatility is what allows the price to continue to skyrocket over time. That's number one. But number two, that volatility now translates into very good cash flow for us as owners of BTCI. So really important. And yeah, I kind of alluded to this earlier. It's why the yield is so high, and people like my initial reaction to the yield of BTCI was like, come on, this is ridiculous. Like that, there's just no way that's going to last. At the time of this recording, it's a little above 27% annually. That is absolutely insane. But when you look at the distributions of BTCI from its inception, it's pretty consistent as far as the yield goes. Their goal with their yield for BTCI, NEOS that is between 25 and 30% per year, right? So it's not guaranteed. Of course, it's going to fluctuate a little bit depending on market conditions, volatility, options prices, etc. But that is why there's this initial shock of the yield being so high, and you're like, nah, that's not going to last. It's a scam. That's just too good to be true. But actually, it's not, because because of the options and just how options work. And when you understand that, you realize that 27% yield on a covered, like selling covered calls on this particular asset that's so volatile, that actually makes sense. All right. So obviously, Bitcoin, again, it's higher volatility equals higher options premium, and Bitcoin has much higher volatility than your average stock, than the S&P 500, than the Nasdaq, really any other asset class when you compare it. So a higher yield is actually normal for a strategy like this. Now, of course, the risk is that, we still have downside exposure to Bitcoin. So if Bitcoin has another massive correction, well, we are going to experience that. However, as opposed to just holding spot Bitcoin in cold storage, where it's not generating any cash flow and we just have to endure those price ups and downs. And, obviously it's a good opportunity to dollar cost average. The cash flow that BTCI is generating actually smooths out that the risk within our portfolio. It helps to it provides somewhat of a buffer to the downside, because even as Bitcoin's price corrects, we are generating cash flow still from this covered call strategy. That's bringing our cost basis down as well. So it kind of smooths out some of that like long-term volatility from a price perspective. Right. But that's why the yield is so high. It's because of the higher volatility that equals higher options premium. All right. Now, this is an important question. This was a big part of my research as well, because I don't want anything to do with companies that are just like wildly over leveraging themselves and rehypothecating stuff. I just, when you go back to, the FTX crash and, these other yield companies that were providing yield and stuff, they were rehypothecating multiple times, and it was just a complete disaster. The good thing is that BTCI, all they're doing is buying assets and then selling covered calls on them. All right, there's no margin, there's no leverage, they're not taking on debt. All right, they're just whatever assets under management they put that into the underlying assets in order to implement the strategy and start selling covered calls. That's it. All right, they're not selling naked calls as well. It's all covered options that they're selling here, meaning they're not selling options on assets that they don't own right now. Okay, so it's not leverage or anything. The income comes from selling volatility, not leverage. I absolutely love that. I'll say it again. The income comes from selling volatility, not leverage. I think that's really powerful, especially since so many companies these days are leveraged to the freaking hilt, right? I don't want anything to do with that. I want something sustainable over the long run. Now let's talk about some of the trade-offs. I've alluded to some of this a little bit. Really, the trade-off is the potential upside of Bitcoin. So my example earlier, if Bitcoin goes up 100%, Bitcoin BTCI is probably not going to keep up with that, right? Because our upside is somewhat capped due to the covered call strategy. All right, so we're not going to capture 100% of the Bitcoin, all right, which is also why I think it's important to still own some Bitcoin. This is not an either or scenario. In my opinion, you should not be asking yourself, should I buy Bitcoin or should I buy BTCI? Well, no, buy both of them. Now, it's not financial advice, all right? Do whatever you want. Again, this is all about me sharing my journey, guys. This is what I am doing. I already have and continue to build a pretty healthy stack of Bitcoin in cold storage because I believe in it long term. But this is a new financial product that I think we could take advantage of to accelerate the wealth building process in our lives. And I am willing to sacrifice and give up some of that upside potential for cash flow right now that I can utilize to acquire more of this asset, which increases my cash flow more and continues to compound over time. So we are giving up some of the upside. In exchange, you get that consistent income. And that's really what this is designed for. It's for income-focused investors who believe in Bitcoin long-term, specifically with BTCI. All right, so that's but that's really the only major trade-off that I can think of, anyways, is we're giving up some of that upside potential. That's it. I'm willing to do that for a 27% yield. All right, because you got to think too, with an asset that's like, I'm a big fan of acquiring income-producing assets. And, holding spot Bitcoin doesn't really translate into cash flow until you either sell it or you borrow against it to then maybe acquire income producing assets later on down the road. But then you're starting to take on debt and leverage, which is not necessarily a bad thing, considering that Bitcoin has a compound annual growth rate of 40 to 50% right now. But it is still something that you have to manage. You have to be you have to be responsible with that. Versus if we give up a little bit of that upside, we can have an asset that has Bitcoin exposure, but generates cash flow right now. And I don't ever need to sell it, really. Like, why would I ever sell BTCI? It doesn't really make sense. I would just turn the distributions into actual cash flow as opposed to like reinvesting them. But yeah, I think it's just like having that cash flow come in is really powerful. Not to mention, really quick, guys, before I get into this next slide, actually, it kind of segues into this. How about this? How about we use some of the cash flow from BTCI to acquire more spot Bitcoin to put in cold storage? Could we not do that? Could we not take a portion of the cash flow coming in from BTCI and just flow that into Bitcoin? Absolutely. I think that's an incredibly powerful strategy. All right, so BTCI versus owning Bitcoin. Owning Bitcoin, obviously, we're going to get maximum upside. We also get maximum downside too, without the cash flow to kind of buffer that. So it's always give and take here. It's no income until you start utilizing it to acquire income-producing assets, which, of course, that's a different subject. All right, higher volatility because you have exposure to the actual asset class itself, and you don't have the cash flow to reduce some of that volatility in your portfolio. Versus with BTCI, we have reduced upside, but we have monthly income, really, really good tax efficiency. We're monetizing that volatility, turning it into cash flow, right? So different purposes, but I think combining them is probably, in my opinion, the best way to do it. All right, so who is BTCI for? BTCI might be a good fit for you if you want income exposure tied to Bitcoin. If you understand options-based strategies, you don't have to be a complete expert, but just watching a few YouTube videos, understanding how a covered call strategy works. It's not super complicated. So, and if you prefer cash flow over maximum upside, which is preference for me, usually I am most of the time okay giving up some upside for cash flow right now, because I can use that cash flow to acquire even more assets that more than make up for the amount of upside that I'm giving up. And also, this will be a good fit for you if you're a big fan of Bitcoin, but you're not a huge fan of the price swings. Turn that volatility into an asset for you. Like, turn it into actual cash flow. So you want volatility to actually work for you. BTCI is a great way to do it. Who BTCI is not for is pure Bitcoin exposure. Like, you're not worried about cash flow at all. You want to hold Bitcoin long-term, no cap. I mean, I'm the same way, right? So again, I'm doing both of these. I have both. Don't understand options, but again, it's pretty, it's not a super complicated thing to understand a covered call strategy. And if you expect Bitcoin to outperform in the long run, I guess, BTCI might not be a good fit, but still, I don't know, 27% yield right now is pretty awesome. Okay, now I think this is important as well, because people see, like, they see a really high yield, they get excited, which, it is an exciting thing, but it shouldn't be the sole basis of our decisions, just because that yield is probably going to fluctuate. Hopefully it stays between that 25 to 30% range, but even if it goes from that to 20 to 25%, that's still a really good yield. But it is important to understand that this does not mean, like, the yield does not mean guaranteed high returns. Nothing is guaranteed about this whatsoever. It's going to fluctuate, depends on volatility and options pricing. It's not fixed like, if you invest in treasuries or whatnot. This is a much more volatile asset we're just turning it into cash flow. That's it. All right. So let's summarize really quick and we'll wrap up. All right. BTCI, Bitcoin Income ETF, turning that, basically monetizing Bitcoin's volatility, turning it into cash flow. It's using a covered call strategy in order to do that. Buys the assets to get exposure to Bitcoin, sells covered calls on them. That's it. It's not much more complicated than that. Trades, we do trade a little bit of upside for cash flow. Already talked about that. And I mentioned this earlier, though, but I think this can be a really, really powerful way to continue to increase our Bitcoin holdings. Is we can direct some of our cash flow into BTCI and then use the cash flow from BTCI to reinvest distributions, right, back into BTCI. So we acquire more and more shares of it, which will increase our cash flow over time. But what if we take a small portion of that cash flow from BTCI and move that into actual Bitcoin? I think that's a fantastic way to acquire more actual spot Bitcoin. But that's just me. All right. So final thought, Bitcoin is volatile. BTCI turns that volatility into income. All right. Not going to beat a dead horse here, guys. But I'll go ahead and wrap up with that. I just wanted to be as thorough as possible because I think this is a really, really powerful asset. And I want to make sure you guys have the information you need to make an informed decision for you. Like I said, not specific financial investment advice, just sharing what I'm doing, sharing my thought process around these things. This is, to me, a no-brainer. If you are a long-term believer in Bitcoin and you don't think Bitcoin is going to zero and you don't think it's going away, and you recognize all of the mass adoption that's taking place and how it's really setting the stage for Bitcoin to be a really powerful asset in the long term, like over the long term, then this to me is a no-brainer. Right? We're just turning some of that volatility into income right now. That's it. So anyways, I hope that was helpful, guys. If you have any questions or feedback, I would love to hear your thoughts on this as well. What do you guys think about BTCI? Leave all of that down in the comment section below. Make sure you check out the links in the description for additional tools, training, and resources. Make sure you join the free Facebook group and connect with me there. And I will talk to you in the next one. To your success, Matty Ice is out.